All of my SoFi hodlers, welcome back to the channel. I hope you guys are having a great day, and hit that like button for me if you own a single share, if not more, of SoFi. Now, here in this video, we have a lot of important things to get into. The institutional 13F filings that are coming out for SoFi. We have the option flows, the block trades, and the sweep trades by institutional investors. We also have the short interest to go over here in this video, as well as some macro events that are going to move SoFi. So let's dive into this video. If you guys find entertainment, if not education, out of this video, hit the like button, subscribe to the channel, and comment down below. Let me know how many shares of SoFi you do currently own. So diving into it, SoFi is up 1.87%, trying to stay above $12 per share, seeing a little bit of resistance above $12 per share, currently at $11.93 per share, and we are following what the overall markets are doing. SoFi was just up a lot. We've seen that tick down, and same thing with the SPY. So SoFi is correlating the SPY more or less today, and that's really why, we're kind of range bound. We're not taking off a 5% day like we typically see, because one, we're following the SPY in the overall markets, but two, there's a lot of economic factors, macro factors that are happening currently, and that's what we need to talk about right now. So if we're thinking about the macroeconomic factors, what is going on? What is causing that underlying fear to remain in the markets? The markets are not taking off. They're up, but they're not doing all that great. Some sectors are down a lot, like your fintechs even, which surprisingly SoFi is not. Square, PayPal, those guys are down quite substantially today. It is the CPI numbers that come out on Thursday. February 10th, CPI comes out. It's estimated to come out at 7.3%. If it comes out higher than that, expect a big down day. If it comes out lower, then the markets might actually respond bullishly, but it's still going to be a negative thing nonetheless. There's no way to put over 7% inflation into a bullish sentence. There's no way around that. So the markets, we're just going to have to see if they do start to price in a much more hawkish Fed Jerome Powell. If they do, that's where you really start to get clapped. And they have actually been pricing in a very hawkish Fed Jerome Powell. As you guys can see from the 10-year treasury, it is up 0.04% today. And if you take a look, it's breaking out of this range we were sitting at about 1.85%, now at 1.95%. And this is the 10-year treasury bond. This is really what your mortgage rates, what your auto loans go off of, and then the banks obviously take their couple percentage points of interest on top of that. But what this is telling you is that people are expecting the Fed to raise rates faster, to bring the federal funds rate up, and that drives up the price of bonds. This is essentially saying that people are selling bonds to make that yield go up. Think about this like a dividend stock, right? If a stock pays 2% dividend, the share price is $200. If the stock drops to $100, now you get paid a 4% dividend. So think about it like that. People are selling off bonds because they expect to get them at a much higher rate in the future, and you're seeing that pace of that sell-off really accelerating, driving those prices up. Now, usually when bond yields rise, stock prices fall. Let me say that again. Usually when bond yields rise, stock prices fall. And we're seeing both of these rising today. So if that CPI number is really bad, you're going to see things catch up to what the bonds have been doing. So keep that in mind. And we're also facing a potential sell-off by the end of the day. We've kind of switched into more of a bearish sentiment for the markets, and certainly if we break under this really 450 zone in a substantial way, then you might see that end of the day flush like we have typically been seeing. Like it's pretty damn obvious at this point. 1, 2, 3, just end of the day sell off. So keep that in mind. We're at a very important level. As you guys can see, we have moved a lot in the SPY every single day, but we have not moved at all. This median is still in this range of 448 and 450. So today's going to be very important, setting us up for the CPI data on Thursday. We also do have some earnings that come out today and after hours. Peloton, Enphase, Chipotle, Corsair, Lyft, XPO Logistics, and Spirit. Those are going to be the main ones that I do pay attention to. After tomorrow on Wednesday, we have the biggest earnings of this week, which is Disney. Disney is going to show a lot for consumer demand. Are people still going out and doing things? I don't know if that will translate into a direct response in SoFi stock. I wouldn't imagine so, but it is going to set the mood before CPI on Thursday. So depending what Disney's earnings are, if they are really bad, then I would expect that to take down the markets in a quite substantial way. So keep that in mind. Earnings are still very relevant. You're getting into the small and mid cap stocks now, like your Corsairs, like your, other stocks, DraftKings, right? So you're getting into these smaller companies. They're not going to move the markets directly themselves, but they can move certain sectors besides Disney. That is more of a larger cap stock. It's not technically a mega cap, but it is a large cap kind of tech stock now, if you will, because of Disney Plus. So there's a lot of different sectors of the Disney report that you could pick and choose for different sectors of the markets that could get a boost or could definitely not see a boost. Now, as far as the option flow from institutional investors, today you're only seeing 43% positive order value, 8 orders totaling $3.57 million. So this is a lot more bearish than we are typically used to seeing, and a couple interesting trades are coming in. You see January 20th, 2023, 1750 puts. 3 of these that came in back to back, and then one January 20th, 2023, $12.50 call. So it looks like they're doing quite a bit of hedging right here, playing for the downside, probably trying to protect their positions as well. And then they also bought a call, and I presume that it's the same people since it's the same strike and it was very close together. So that's really the institutional order flows. Over the past week, we've been sitting at 84% positive order value with 79 orders totaling 36.74 million. So institutional investors are very, very bullish on the future of SoFi in the long term. So that is certainly looking good right there. And then as far as the short interest and why I say you just can't ignore this, it's 20.73%. That is very, very high. No, this is not a short squeeze trade, but if you do see a bullish earnings or you see something that is bullish happen in the markets and shorts cover, that's still going to drive us likely back up to in between $14 and $20 in my personal opinion. So you are looking at 20.73% short interest of free float. Like I said, 128 million shares that are sold short, cost to borrow max of 3.14% and share utilization of 57.54%, days to cover at 2.79. That is also important because that is saying if shorts wanted to cover on all of these shorted shares, it would take roughly 2.79 days to do so. So it would be very hard for them to get out of their short positions in a rapid fashion if they so wanted to. Now, finally, the 13F filings, we could see that we have one firm, Heartline Investment Corp, that did sell 51% of their position, but overall, people are just loading up on SoFi. It's kind of the same story every time I make a video for you guys, that hedge funds are just buying the stock, or institutional investors and hedge funds are just buying the stock. Take a look at this, 80.71% increase to this share position, which now totals 1.9 million shares. Another 116% increase right there. A brand new position for 20,000 shares, 30,000 shares, 17,000 shares, 309,000 shares, 52,000 shares, 300, 189. This story goes on and on. The filings are very bullish, and if you do follow big money, if you at least like to pay attention to it, it's definitely a strong indicator in my personal opinion, especially when it's a stock that is off the beaten path like SoFi. SoFi is not a stock you hear about every single day. It does have a large retail backing, but it also has a large institutional backing. So you get the best of both worlds here, and it is a smaller market cap stock. As far as the institutional longs, they own 81.55% of SoFi, a very large amount, which is also a big win for any SoFi holder. That means more shares will be locked up for longer, and there won't be as much shares or as many shares traded on the open market on any given day. So keep all of this information in mind. And then I do finally I want to talk about the technicals just a little bit with you guys. So if we are looking at this on the daily candlestick chart, we obviously have to get back to $14 per share. I personally think earnings is when we get back to $14 per share, if not higher. And if you're looking at this, we need to break out above the 50-day simple moving average. That is at $14.27 per share. And then we are going to see some resistance around $17 per share with the 100-day and 200-day moving averages up here. If we do pull up the Bollinger Bands, we could see that really the first level we have to break out above is the 20-day simple moving average at $12.74 per share. Seeing a lot of trouble staying above $12 as of recently. And as far as the MACD as well, you're still not seeing a clear direction, bearish or bullish, but it does look good overall, this picture, in my personal opinion, because you're buying SoFi at a very reasonable discounted valuation compared to all of 2021. So that is going to be all for this video. Hit that like button for me, subscribe to the channel, as well as comment down below. Thank you guys for watching, and I will see you in the next one.